Hey guys, it's Simon with Trade and Perform Coaching. Wanted to really kind of do a market preview and kind of a broader review of the month ahead, but also I wanted to take a minute and talk about what it takes to be consistently successful as a day trader. I think that's an important topic. It's an area I see a lot of people struggle in, even though they have setups and they have execution, the ability to execute, they have the capital to trade, and they still have a difficult time executing. And I wanted to talk about that for just a minute. Before we start, let's kind of jump into the disclaimer that I have to read. Legal notices, important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this channel. The past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. Okay, so let's jump in now that we got past that. And okay, so before we jump in, right, we're always asking, for me, I guess originally it was 3 important questions. It's probably 2 to 4 of the most important questions. The first question is, what is the auction? By that I mean, what are the participants in the market? What are they trying to achieve? How good a job are they doing of achieving it? And then there's a third question you have to answer or add to that list. Are they presenting the market to me in a way that meets my predetermined executionable setups, right? And then the fourth question is if they are, am I taking those trades? And if they're not, am I getting agitated that they're not? Because they're both important, right? And a great example of that is my primary trade setups, my highest odds come with 10 to 15 point stretches, right? If we don't stretch 10 to 15 points or we barely tiptoe to a 10-point stretch, right? And then I don't get everything set up for me when we do tiptoe to that 10-point stretch, I tend to miss that trade, right? I really want the pace of the market to be higher. I personally don't trade really slow markets really well, which is fine by me. I'll take being good in a fast, if I have to choose, I'll be good in a fast market versus good in a very slow and grindy market. Because what happens is traders who are very good in slow and grindy markets tend to get really beat up in wide-ranging fast markets, right? So that's an area where I've come to peace with myself, right? That I know, hey, I'm just not going to be great if it's slow and grindy. I'm good, but I'm not great. When the market's moving with a fast tempo, I have a very good read on that market, and I'm okay, right? So before we jump into that, let's go and kind of take a bigger look at what the market accomplished this month or try to accomplish, right? So to do that, I'm going to use ESD and I'm going to use the volume profile chart. And I want to point out that there is a clear pattern that the market tends to follow, right? And there's 2 within here that I want to show. But if we really scrunch this down and we pull this in like this so that we can see a bunch of days, what you will see is that the market follows this pattern. You can see it in here. We go from, I think I can draw, but you know what I've lost? Here we go. Let's do this. There we go. We go from really tiny, tight little ranges, right? And then when we get on the top, we really get small, right? Right before it breaks down, and then we go to wide ranging. At the top, we go to tiny. Then we go to wide ranging. Then we come back to the top, it gets tiny, and then we go to wide ranging again, right? And you can see this pattern repeat over and over. And when we're trending, right, when we're trending up, there's very little fear, right? So you'll notice as we go longer and longer sideways, notice that the range gets wider and wider, right? Then as we're going up, right, we have an upside trend, right? If we're not going to roll over, right, this range, the range will never open up. This was rare that we had it, but this is obviously December and February of this year, right? And you can just see that we stayed really, really tiny for a very exceptionally long period of time, right? Right up to where we are now. If we move to the right a little bit, see if it'll do that. Why aren't we? Oh, I know why we aren't adjusting. Here we go. There we are. So if you look as we move to the left, right? As we move back to the left and we go to the right, you'll see the range opened up, right? And then we got tiny again. Opened up a little bit, and we got tiny again. Opened up much wider, right? Got tiny again. Trend up, right? And you'll notice as we move to the right and sideways, we got opened wider and wider and wider, right? Until we either finally broke to the upside or rolled to the downside and come back in, right? But you'll see this general principle as we move to the right. We opened up, opened up, opened up. We gapped again and got really tiny. So what's happening is, and it's an important concept, right? As at the very, very, very tippy top, the top fifth, right? The range stays like this, and there's not the quantity of opportunities, nor is there the quantity/quality of range to be able to get 3, 4, 5, 6 points, right? Or even 2 points sometimes can be a struggle when it's really tiny. When it's down here, when it's like this, you don't need much, right? It doesn't have to be a huge range, but when it gets like this, meaning off the very top, very 1/5 or 1/10 of the range, then it opens up, right? The next concept is what we're going through right now, which is when we're building it. So why is this important? It's important because what I notice a lot of traders doing when they trade is they come in and they go, for example, someone emailed me this week and said, I'm looking to make 5 to 10 points a day trading ES. Well, if the entire range for the day is 8 to 10 points, what you're telling me is that as a day trader, you expect to collect 100% of the day's range, right? It's unrealistic. I'm happy if I capture 1 to 3 points a day. I've met my target, right? I trade appropriate size relative to how I'm capitalized, right? I know exactly what my entries need to look like. I know exactly what my stops in worst case and best case scenarios look like. And I have the ability to move the amount of capital I'm risking up and down based on the quality of the entry, which is usually in correlation to the amount of stretch that we have, right? It's really hard when we look like this, right, to really catch anyone off guard. When we're down 8 points, there's just no fear involved in the market. VIX is at a low, right? And correspondingly, because there's no fear, there's no way to slingshot back the other way and get a huge gain, right? And if you look at the PA from the actual market, let's get rid of this, right? The market reflects that, right? Through the course of the day, the range of the bars, we got to less than 1 point bars, right? And then finally at the end of the day, we did stretch down exactly 10 points. We did have tick divergence right at the low. They tried to break. This area has been auctioned and re-auctioned. The target was 77.50 for our primary long on Friday. I bailed on the day back over here. It was just too slow for me to maintain focus for that long to grab this. But even if I grabbed it perfectly, right, at 79, let's say I grabbed it at 79, 82 was my upside on that trade, right? That just doesn't spin my wheels, right? I want the market to give me my 2 points easily, right? I don't want to wait 2 hours to get 2 points, right? Because my risk is that I get caught in one of these, right? Where they just come and rip it down all of a sudden for 4 or 5 points. And I want to catch them on the end of this rip down. So this is another good example, right? Between these 2 days, I'm not overly eager to catch this. If I can, that's great. If I see it, I have no problem trading it. But I'd much rather get long this, where I can get slingshotted, right? You can see that we rolled on a 24-hour basis. We had rolled down quite nicely, right? All the way from 94 all the way into 78, right? So it was about a 15-point rotation. It was on a 24-hour basis, and that makes sense. If you remember back in February, we were talking about the same rotation size, taking 24 hours to complete what normally would complete on the intra-day pit session, right? Which is from 8:30 Central until 3:15 p.m. Central Time, right? So again, when it's slow and grindy like this, I'm not very excited. I just missed this trade. I was limit 90. What was I limit? I was limit 79.50 on a backside test right here, and it on this bar right here. I won't forget it. Right? It just didn't fill me. But guess what? I know that's my fill, and I'm going to try to attack that every time. So now I want to transition to a point there. Right? We've learned a lot of things that are really important. We know that right now the market is behaving in two ways. First of all, it's behaving as if this is a top, right? See how we got real tight here, we get real tight in here. And we've been trading sideways for 4 days in a row, right? As we expand it out, if you look, see if I can blow this up for y'all real quick here. We'll just plus it out, right? 1, 2, 3, 4. This 2390 area, guys, down to 2380. We have negotiated and renegotiated. Remember, what is an auction doing, right? We're trying to figure out where we most agree on price, right? And we can do that on multiple time frames. We can agree on price in both a very short time frame, meaning 10 or 15 minutes, and we can agree on price on a weekly time frame, and then we can agree on price on a daily time frame. The one I focus on the most is where we're agreeing on price on a daily time frame. And when it gets really narrow, right? Think about it this way. When you go to if we're negotiating with the same people every day, let's say this is a negotiation over a jar of peanut butter, right? We have spent 4 days, let's say it's $2.39 versus $2.38, right? We're trying to figure out, the analogy didn't go very well there, but let's say it's a jar of peanut butter, whether we're going to sell it for $1.50, $1.25, or $1, right? Where we're trying to find that balance, right? As a seller, I'm trying to find where I can optimize my profit and maximize my sales, right? Relative to the margin I'm trying to achieve. As a buyer, I'm trying to decide who's offering, at what price do I get the most value where I'm motivated to buy, right? And usually what the market will do, I'm going into auction market theory here, and I'm not going to spend a lot of time of it because I'm not an expert at auction market theory with regards to actually explaining every little detail of it, right? But what you'll see is, generally speaking, the principle is we have a price, right? We agree on price over here, then we decide to come downstairs and recheck up on price. And once we all agree on price, either a new piece of information enters the market, as it did on this day, right? And we reprice it based on the new information. For example, so this is a jar of peanut butter going back into it, and we find out that jars of peanut butter have been making people sick, right? Well, the value to the buyers has dropped, and there is no value to the buyers, right? Or there's very little value. There's very few people who are still willing to buy peanut butter. So the seller, in order to get rid of his inventory, is going to have to drop price. That's what happens here. So here what happened was we built energy, right? We all agreed that this was a fair price. We auctioned over and over and over again until we all agreed. And then we came out and either a new piece of information entered the market, or we all said, let's go check prices lower, because we all agree that prices up here are agreed upon and there's not enough energy to come up. No one wants to explore prices higher. We're saying this is a fair price. Let's go check out the prices lower, right? And what we did is we got down here and everyone said, well, even if some people are getting sick, not everyone's getting sick. And there were some buyers here, right? But not enough demand. There's still more supply than demand. We couldn't push down. So finally, right, there's one more piece of news. People think horrible news comes out about peanut butter. It gaps down, right? And it turns out that news is false, right? For whatever reason, the information's not accurate. Everyone goes, the price for peanut butter has now come down too far. We're going to buy it back up and come back and push all the way through here. And eventually what someone's going to look at it and goes, hey, you know what? Through all of this, right, we really didn't get much of a chance. Let me clear this out so everyone can see what I'm talking about. Through all of this area, we didn't get much of a chance to really talk about price very much. Everyone panicked and we spent no time here. So what the market does is, after, again, notice, we're spending 4 days in a very tight range. We've auctioned over and over this price. We came down. Everyone said this price is unfair. Why? We spent very little time here and immediately rejected out. So what happened was the grocer dropped the price to 25 cents. Everyone said, screw it. I don't care if I'm getting sick or not. I'll buy the peanut butter at that price. It was another brand anyways. I don't care. I'll take it at that price, right? And then we came back up and we said, hey, look, price never got explored up here, right? And demand, let's say the news story changed. Turned out it was only one manufacturer of peanut butter was bad. Peanut butter overall is okay. Well, now everyone comes back up and we start going, let's re-auction this. And that's what all of this is up here, is re-auctioning this poorly auctioned area, right? And then, again, see how much time we spend here? We break away. This is called building energy, right? And we come back and we re-explore prices lower. So we came right down. We all knew that there was buyers here. You could easily tell. And then buyers step back in. And then again, we go sideways, re-auctioning the same area over and over again, right? And everyone says, hey, we all agree on price up here, right? We all agreed on price here. We checked lower. Because once you agree on price here, we re-auctioned the worst part of this area. We finished that up. And then the market said, well, hey, wait a minute. There's a poorly auctioned area down here. Let's see how much of this we can come back and check up upon. We built energy again. This time 1, 2, 3, 4, 5, 6 days, right? We attempted to push back up, rejected down, couldn't close back into the range, gap, and now we've rebuilt energy again here. So we can guess, right? There's a process going on here. And this is very big picture. This has nothing to do with your actual trade setup, right? So I know I'm going down a little bit of a rabbit hole, but this idea of auction, right, is important that you understand. Markets build energy, and then they make vertical moves, right, up and down. So it doesn't get hard to predict that we are due a vertical move. Now I have to get a little strategic, right? I know I'm going to come out of here. I know this whole area in general all the way down here. Let me re-auction this, or excuse me, re-auction it. Throw this out. I know this whole area. Okay, so this area was auctioned, but not a lot. As a matter of fact, we spent very little time in this area. If I go back and look in this area, what I'm going to see consistently is we tend to zip through. Zzz, 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 zzz. We don't spend, so taking contra trades in here gets really hard, right? So now, what do I need to do to figure out? Well, first of all, I know that if we gap down, right, that's one of the first signs to show me that we may be re-auctioning and having the vertical move lower, right? Conversely, if we gap up, same sign, right? So what is my checklist for that? I know that I built 4 days of energy. So if I gap up, right, and out of range, meaning above 2390, and I don't get a half gap or a gap fill, I'm going to say to myself, buyers are in control. I don't want to fight this. Conversely, if I gap down and my first 3 bars look like that, literally red, 3 bars down, closing on the low, that's the most obvious sign of open drive lower, I'm going to go, hey, we're probably pushing down. So then I want to go and ask the next right question, right? These are, like, people get confused at the different aspects and levels of expertise that you have in the market. All of this is my broad market read, right? I'm trying to understand what the auction is trying to do on a higher time frame, right? And in order to get that accomplished, right? In order to get down to what is my specific entry and what is the PA going to look like intraday, so I can be a profitable, consistent execution trader on the day time frame on very small setups, I need to have an understanding on the larger setup of what the market's trying to accomplish. I know I didn't say that very eloquently, right? But this is what I'm trying to understand. So that is why when we're here, right, and we do all this sideways trading like this, right, I can go, I'm expecting a vertical move. Now understand, when I say vertical move, A, it doesn't have to happen in one day. B, the move down, right, once we accomplish that move down, that is the expansion of energy. On this day, right, see how we move down? Mission accomplished. And then it came back up and closed all the way back up at the high. We still broke out of balance here, and we still rolled down over 3 days. But intra-day, what happened? We got stretched on ES, and then we turned around, and we came right back up, right? For 2 reasons. First of all, what happened was we gapped out of balance, but we didn't gap out of range. We weren't breaking new territory. As a matter of fact, we were gapping right into a prior support area, right? So it found responsive buyers. Secondly, when I'm looking at ES, I'm looking for how much it stretches. 10 is one, 15 is next, and 20 is the third. That's in the top third of the range, what I'm looking for, right? I have all kinds of reasons for that, but mostly I'm expecting a U-turn, right, guys? So if you don't understand the market on this level, and you don't see this right here, right? So someone can come in. So understand, first of all, the vertical move does not have to come from a gap up or gap down. The gap up or gap down is a big hint, right? So that's a warning sign. But we can simply open flat and then go vertical, right? We can open flat and push up. We can open down and push all the way up. The market can do, number one rule, right? Market can do whatever it wants, right? But it usually provides us with a clue as to what it's inclined to do, right? So if we open at 23.90 and I sit there and watch it, and I see things like it coming in for a zero tick with no counter rotation on the price, I'm going to go no half gap, no gap fill, 3 green bars up. The first thing I'm going to do is I'm going to go, I don't want to short that, right? That's potential trend day up. And if it's inverse, I don't want to go long that until I see a couple of signs, which I cover in the room daily. What are the signs that the momentum is slowed in one direction and we're about to get a key reversal, and the primary focus is on the long side, right? So I bring all this to you because when I talk to traders, right, they don't have this separated out. Like this, all this work, what I'm covering right now, this is all broader market idea, right? This has nothing to do with what I'm going to actually do when I'm looking for my entry, right? I'm looking for tick divergence. I'm looking for rotation. I'm looking for specific patterns, right, between the tick and the price action, right? And I'm looking specifically at the price action. I'm looking at what the behavior is of other traders. How do I tell that? Because I can look at the, in real time, right? I can look at the, I can look at these candlesticks and I can determine in real time, I can say, hey, this is the behavior, both in, I do it in CL, do it in ES, and you can do it in any market. But all of these things are different skill sets, right? So I'm using the bigger picture, bottom line, bigger picture to help me with my smaller picture. Now, going back to what helps me to find that. Checklists, right? I have a checklist for pre-market. If anybody wants it, just email me at tradeandperform@gmail.com. I'm happy to share it with you. But I go through and I highlight what are the important points. These are mundane points. It's important that I highlight that it's mundane points. Why? Because the important details take place within the mundane, right? So much so that your brain will kind of skip it like, oh, I totally missed it, right? Next, I have a checklist, whatever it is, for my, I have a similar checklist. I don't have it in front of me and I don't want to take time to pull it up. That before I enter a trade, I have certain criteria. And I make sure that the trade I'm taking actually meets a predetermined entry, right? And then I am constantly adjusting those entries based on rotation size, and that correlates to, are we at the very tippy top? Are we building energy or not building energy? And what is the average trade range for each and every day, right? What's been the average trade range? And I have and some of those questions, like my first question is, you know, overnight range in points. Why do I want to know that? Because that's maybe the first place that gives me a hint that if every night we've been trading in a 5-point range, as we have last week, and all of a sudden we have a 15-point range, then I may want to adjust my entries to make sure I have a 10 or 15-point stretch before I enter. On the other hand, if the overnight range is 3 points, I might go, hey, 8 points is what I'm looking for intraday. We don't have any energy to the general market, right? And then I'm going to go through my setups from there. To be a good day trader, okay, it's not the same as being a good swing trader. You cannot have I think you have to have higher than a 70% win rate to be a successful day trader. People can argue with me all they want, right? But those have been my numbers. If I don't stay up at 65, 70%, and I don't keep my risk reward proper, and the reason for that is, first of all, it's a very tough mental game. You're going to make errors and you have to be able to absorb some of those errors. as you move through. You're going to take trades. You're going to miss small details on occasion. You're going to trade too far into the day and make those mistakes, right? So it has to be able to absorb for mistakes, right, which will happen. Secondly, the other part of it is you have to have a high win rate, because if you're using leverage, right, it changes the whole picture. It's different than just buying a cash position in the spiders and going, hey, the spiders haven't dropped more than 1%, or they've only dropped 1% one time in the last 4 months, which is true. Okay? So you know what I'm doing? When I get my trade entry, I buy cash in the spiders, and as long as we don't go down 1% from my entry, I'm fine. I'll wait for it to come back. Well, there's nothing wrong with that trader. That's totally fine, right? Because that trader will survive. If he loses 1% of his capital. Most days he's going to make money because of the nature of ES, right? Most days he most likely will. That'll be the outcome in this current setting, right? And hopefully that guy's disciplined. He doesn't have nearly as much stress. But when you're trading futures trade differently than spiders. First of all, they're jumpy, right? Even if you're not leveraged, everyone else participating is leveraged, right? And the fact of the matter is most people are leveraged. And so you have all these emotions come in, which is where I want to do the last thing. I've really been on a kick about how much I use meditation to slow my mind down and calm down to find very specific setups. Obviously, I'm posting this to the public. I don't want to give my specific setups. I save that for members of the room, right? But and not only that, but I'm reading the market in real time, so my setups are variable, right? I know what I'm looking for, but I'm varying the actual entry based on rotation size and price action, right? So the point is this: if you are trading futures, I don't care if it's oil, copper, gold, silver, ES, NQ, you're trading a leveraged product, and therefore it trades as a leveraged product. It's jumpy. You have to have a calm mind and a clear plan, because when everyone else around you is jumpy, you will tend to get jumpy, right? All kinds of, they describe it as the monkey brain, monkey on your back, the monkey mind. How else have I heard it described? Every which way possible, right? But what I'm trying to do is maintain a high level of focus. I'm doing my homework, so I already understand what's possible in the larger time frames, and then I'm adjusting that down, right, to be very accurate on my intraday basis. And then I'm not trying to do, I want to stress this, I'm not trying to do the extraordinary. I'm not trying to capture 100% of the range. I don't think it's possible for most traders to do that. And when I say most, remember the failure rate on day trading is close to 70-80%, right? On the retail side, right? B, I don't think it's realistic that you can buy the low and sell the high. I just don't think do you do it as a trader? Sure. But does it happen very often? No, right? So what am I trying to bring this back to? Have your checklist, right? Understand how price action works. Mind Over Markets is an excellent book to start with for understanding how the auction process works, right? And then lastly, have a checklist as you're going through both pre-market, covering the mundane. Is it a Fed day? Are there any Fed speakers on tap? Is the market trending out of London? Are we above, below, or inside prior day's range? Is there an increase or decrease from the prior day's overnight range, right? Prior day's first hour range, prior day's first 10 minutes. I'm looking for clues that things are changing, right? Then I have my fixed setups. I know exactly what I'm looking for, either combinations of 50-60 pullbacks, tick divergence, or into key HVN locations, right? Those are my trades. There's no secret about that. I didn't invent any of these trades. I just learned how to execute at a high level, right? And where I see people fail, right, is they don't do the detailed work, and they don't have their trade plan written down, and they don't do a written review, and they don't combine or account for the fact of how they're going to keep themselves calm and collected under pressure, right? And they actually ignore the fact, what I see most traders do is they ignore the fact there's actually any pressure there at all. They somehow feel that they're special and won't be affected by pressure, even though we're affected by all kinds of pressure normally in life, right? And where you want to get to, what all this is doing is helping you perform at a high level, right? Meaning the checklists, the broader market review down to the very tiny level. This is helping you execute going, That's exactly what I was looking for, right? And then also understanding what kind of market, what kind of price action you best perform in. There's one last piece. There's a conception that if you're a day trader, you should have A, trades every day, B, that there should be lots of trades every day. And that is incorrect. I'm looking for 1 to 4 trades a day max, right? In a volatile market, 4 trades, right? In a non-volatile market, 1 to 2 trades, right? I'm looking to take my money. I know how competitive this business is. I'm competing against Paul Tudor Jones, George Soros, and the likes, and large amounts of very gifted and talented day traders that are trying to take the other side of my trade, right? So I respect them, right? So when I get my 1 to 3 points, I go away and realize, hey, I had to work hard to get those 1 to 3 points. Now I'm going to go and make sure I'm stacking my chips on a day-by-day basis. And instead of trying to capture more points in a market that's not offering them, I'm going to go and see how much I need to gain to add 1 additional contract as I'm rolling forward, right? And that's all part of a master trade plan, a well-worked journal, right, and mental preparation. Anyways, I went way longer than I wanted to, guys. My message here is very, very clear, right? Day trading requires precision. It requires the ability to execute the same trade multiple times in a row. And if you look at every great trading coach from Thorpe to Douglas, right? Mark Douglas in his book, and I forget the title, it's escaping me. He would have his trading clients, right? These are guys who are making professional traders go, look, you have to execute the exact trade perfectly 20 times in a row. I am yet to be able to find more than 2 people since I've been coaching for years now, right? I don't think I have more than 2 people who've executed the same identical trade 20 times in a row, despite the fact that they know they have an edge, right? That's what I strive for, right? And then as I've built my portfolio of trades, acceptable trades, right? Some that are up here at the bottom of the markets, some that are up here at the top of markets. But as I build my portfolio of trades, I'm looking to execute that same trade over and over and over again. And I'm not looking at the outcome of any one trade. That doesn't mean I'm not disappointed. I just don't let it affect me into taking trades that if it's a stop, it's a stop. I expect stops, some stops, right? And I expect to have many more wins than I do stops, right? But I do expect to have losing trades. I find most traders expect that, hey, I'm going to start at point X and I'm going to go straight to point Y. And what they do is very interesting, right? They say, yeah, I understand that I can lose money and I'm okay with that. But when they actually lose money, they're not actually okay with it, right? And that's where their flaw lies, because they get so emotionally upset by the stop, or even if it's 2 stops in a row, right? And then they go off plan. And the problem isn't with the 2 stops. The problem is the going off plan where you start to dig a hole. My last piece that I'll leave y'all with entering the month is, and this is really important, right? Don't draw down, okay? There's no need to lose 50% of your trading account. There's no need to even lose 25% of your trading account. You should be able to execute at a high level and pull money out of the market. If you can't, go back to paper trading until you can consistently paper trade. Once you can consistently paper trade, consistently execute with real money. Then as you can consistently execute with real money, start working on increasing your trade size. But y'all work way too hard for your dollars to allow yourselves to lose those dollars experimenting when there's a clear-cut path to success that's been laid out before, right? It's doable. It just takes work, right? And then you have to give yourself your time to actually learn how the market works so you can trade well. Anyways, my name is Simon. I went on way longer than I had intended to. I hope this helps a few people. If you would like to visit us in the trade room and see what we do, I think it's a really great value relative to what I offer. We do real-time live education in the room, market preview, and nightly charts in ES for $95 a month. Anyone who'd like to visit us for a week, email me at tradingforform@gmail.com. I'm happy to extend you a pass for the week. And that's it. I'm going to have dinner with my family. Have a good night, guys. Do your best. Don't draw down. Follow a written trade plan. Go through your pre-market routines. Come here and treat this market like you have serious opponents who are looking for you to make a mistake and then come and hunt their mistakes and take their money, guys. Have a good night.